What is up, guys? This is KOJOFOREX, aka GBP Emperor, aka Emperor of Blues. I'm back again with another very short YouTube video, basically focusing on Sunday technical analysis. And I'm so excited about this content because, guys, I have a lot to reveal to you guys, technically, fundamentally, and then teach you so many things that perhaps you have not really wrapped your head around, right? Looking at currently what is going on technically and then fundamentally, including geopolitically, we all know what is happening with Russia invading Ukraine and then oil prices soaring up, gold prices soaring up, the indexes dropping and stuff like that. So in today's analysis, I'm going to show you my perspective of what I'm expecting the market to do in the coming week, at the same time explaining what it has done previously and what led me to catching some of the most interesting trades that I sent to my community members. So if you want to be a member of my community, because if you're not part, you're literally missing out on the banging trades that I've been sending out to the community for free, then click in the link in the description to join the KOJOFOREX Telegram community. Currently has over 27,800, approaching 30,000. And make sure to link up with me on all social media at KOJOFOREX, especially on Instagram, because very soon I'm going to be starting my Instagram live sessions actively again, and I'm going to be sharing a lot of trading nuggets that will improve your trading style. So without wasting much time, guys, let's go right into the chat and let me show you all the exciting things that I have for you guys briefly. Yeah, guys, so if you've really been following what has been going on technically with, Ukraine, Russia war, they're gonna see that so many factors have been playing out. We can see oil prices really rallying, right? Oil going all-time high since about 12 years ago plus, right? Now you might want to wonder, what is really driving these oil prices? So if you kind of really look macroeconomic wise, you can realize that Russia kind of remains one of the world's leading exporter of oil. It means that so many world economies depend on Russia's oil. US depends on it, UK depends. In fact, most of the European economies depend on Russia's oil. So Russia invading Ukraine and then the world imposing that sanctions, or in fact not the world per se, but I mean the big European economies imposing sanctions on Russia, then it means that they're not really going to be importing as much oil as they already do from Russia. So what does that mean? There's going to be somewhat artificial shortage in supply of oil, which also means that shortage also will drive price high because a lot of money is chasing fewer goods on the market. So that has been really the predominant reason why we can clearly see, if I move this on the daily, why oil has been really rallying from $67 per barrel all the way to its all-time high in so many years to about $129 per barrel, right? Now you guys could also realize that along the line I predicted about 2 or 3 months ago, right off from the beginning of December and then January, that we may have gold prices rallying all the way high. Right now, this is where it gets interesting, because I told you guys that, look, if you really get very good technically, then you're going to realize that what technicals always almost aligns with the fundamental. The technical always just prepares itself, and then fundamental just precipitates the move in which the technical analysis is supposed to already go in. So one way or the other, it literally means that as a trader, you should be very good technically. So yeah, using my own technical perspective, which I'm going to throw a little bit light on so that you guys understand how could have seen that gold could have rallied, because I've had a lot of people hitting me up on Instagram. Can you explain, share your perspective of what you saw and how you knew that gold was going to go up, right? Now, yes, technically, it was all set and clear that gold should have been going up, right? This thing had been ready for a long time, but all of a sudden the move broke, right? And I realized that no, maybe geopolitically the event was not ready for gold to have broken all the way up. So it means that the market had to just churn itself again, right? When I say churn itself, it means that it has to go down, play around again until it comes back into that linear form, which shows that it's going to break up on the upside. Then you can know that the event is ready. Lo and behold, then we had just a few weeks after I put that announcement down that gold was going to go to 2100, Russia literally invading Ukraine. Now, why would gold go up? Now, gold will only go up because gold serves as a safe haven right now. If you know anything about safe haven, then you know that when the world is going into shambles, then you realize that most investors, most traders would rather withdraw their capital from risky assets and then put it in a safe haven. Safe haven means that what is a safe keep for them, right? Rather than putting their money in a very volatile asset that can really, disrupt and go bankrupt, then you want to put it in an asset like gold, and then it's stabilized a little bit. So more money flowing into gold means that gold prices are going to drive up. That's exactly what we had gold doing. Now, if you really followed exactly the time that I put out that gold was going to go to 2100, when it was literally playing around 1800, then that would have been you as a trader catching as much as 2500 pips, right, which is 2500 pips, and 2500 pips of gold is insane. I personally caught a trade on that with as little lot size, and I made thousands of dollars, which I'm going to perhaps share it on the screen that you're learning. So what did I really see on gold? I'm just going to touch on that briefly before I show you guys what I have for you with this Sunday analysis. So you can see clearly that if you look at gold, then look, when we put the trend line theory that I taught you, if you've not also watched my trend line video as well, right, then you might as well just go on my YouTube and then search my third touch trend line video, because it will go a long way of helping you understand the whole concept that was in play here, right? So like I said initially, this is exactly what I had when I initially thought that, okay, we could have like, you know, gold breaking off, because you realize that for a long time it's just been trading beneath the trend line, right? If you realize from what we're seeing here, you can clearly see that what upon hitting its highest peak somewhere around 2020, right, which is like that 2100 era, then we had gold literally, you know, creating lower lows and lower highs, right? Lower low, lower high, lower low, lower high. And then for somehow we also know that if you've been able to master chart pattern, then you know that when we have a formation that kind of looks like a falling wedge, then the resultant implication is that it should break on the upside, right? Now with that lower low, lower high creating, then you can really see that what we have this kind of a beautiful wedge structure, right, which is like not the most perfect of it, but still the storyline is clear, right? So upon adjusting this trend line, I realize that the wedge structure kind of comes into this perspective. But on the first touch, right, which is the 0.1, 0.2, 0.3 touch, we kind of had gold really dropping using that third touch of the trend line, you know, playing out perfectly just from this angle that I'm showing you, right? So let me just quickly take this one off. You can clearly see that this is on the daily time frame. We had gold literally hitting here on the first touch. It drops. Then we have the second touch here. And then we finally also have what? The third touch. And then what can we see with the reaction on the third touch? We also see what? A slight drop in prices, right? So upon that slight drop in prices, what it also meant is that, look, as far as the market keeps, you know, resisting on a trend line one way or the other in the future, it's meant to break that trend line. It's part of technical course that you must just naturally know as a trader, right? Which is the fact that as far as, let's say, a support level is being, you know, held on for a while, or a resistance is being held on for a while, as much as the market keeps coming to that zone, testing it, coming to that zone, you must know technically and then accepted that the next time it comes there one way or the other is naturally meant to break that zone, which is exactly what I was expecting gold to do, right? So with that continuous, you know, tap onto that zone and then rejecting, I realized that it is naturally forming that wedge, right, pattern, right? If you go quickly even into the weekly time frame, then it kind of makes it even clearer, right? So we have all this perfectly aligned, right? We can use this tool here to see that alignment beautifully, right, from here to here, right? Then you can clearly see that, okay, this is exactly what the technicals are showing, that we are creating some form of a wedge pattern. And then we all know that the resultant effect of a wedge pattern is a break on the upside. So breaking on the upside, then where could we go? Perhaps back to this previous high here, the last high, because that's what the equidistance of that break, and then likely path of least resistance that it can use to reverse and then come down. So under normal circumstance, I should have perhaps even anticipated that gold could hit like, you know, 20 and then 75, which is $2,075. But per my also expertise in psychological levels, then 2075 was nowhere far away from 2100. And I'm like, okay, we might as well use just 2075 as, you know, a trick zone and then tap into 2100 before we drop, right? Lo and behold, what did we have gold doing? We had gold literally rallying all the way high, tapping exactly into 2075, which is like the last high I printed, and then dropping, right? But I kind of expect that one way or the other we may find ourselves going back up. So that is exactly what we are going to be looking at. So technically we were ready, fundamentally we weren't ready, and then fundamentally what needed to precipitate this movement was Russia invading Ukraine clearly, and that pushed us up there. So without wasting much time and then being so technical and letting this video be extremely long, let's just pause on that. I'll find other time to even hit more on the fundamental implication and geopolitical analysis that directly relate to everything that is going on the chart, so that you guys will have that understanding. In the meantime, let's look at my perspective of what I'm expecting the market to do and my hot picks for the week, right? So quickly, let's go on to my setups and hot picks for the week. So starting off, like I told you, I still kind of expect gold coming all the way high, right, into these zones again. So starting off with gold for the week, I still kind of expect that gold is going to make a move up like this, perhaps before maybe a final drop and change in direction. Now, why do I expect gold to make a move high like this? If you've been able to study market structure, then you're going to understand that with market structure, before a trend is going to change, then structure must be broken. So if we're in a high low formation, which means that we are in an uptrend, for structure to be broken, we must somehow form a lower high, lower low structure, which is like the market not exceeding the previous high it had already created. And then for us to confirm that the market have not exceeded the previous high it has created, then it must actually make an effort to reach that high. And then if it does not necessarily break it, then we can see that structure is not trying to hold its uptrend, and then we can make some projections out of it. That is exactly why I would be expecting gold to kind of force its way all the way up here, as if it's about to make a higher high before we have that drop. Right now, it'll be interesting for you to already see that gold has kind of created this tweezer bottom here, which is also a perfect reversal pattern, which kind of signifies that, look, one way or the other, it is really ready to push on the upside. So keep your eyes on gold for a bullish move before perhaps a bearish move. Let me quickly scan through all my currency pairs. The one that kind of looks interesting, I'm going to tell you my perspective on what to expect. Right before that, you guys see this chart? One of the most insane things that kind of happened over the weekend, I think last Thursday or Friday, right? This is the nickel chart. Now, if you're not a commodities trader, you might have perhaps never opened this nickel's chart before. But this chart was as a result of a Chinese investor literally going short on the nickel chart, expecting that there's going to be like perhaps a drop because of the whole fundamental event going on. So as speculators, sometimes you can be so excited, hyped to put in billions of funds trying to go into a position on the market, and then he got short squeezed, right? So if you've never heard of the word short squeeze, like when somebody is literally trying to short the market to make huge profit, and all of a sudden people are going in opposite direction of the person's position, and that's what led nickel to trade around 64,000 all the way from 26,000, which was very insane. The market has never seen the commodity nickel move in this kind of manner before. So that's just by the way though, right? So yeah, with that also being said, let me kind of quickly glimpse through my favorite pairs and then tell you what I'm expecting, right? So yeah, we kind of see GBP USD trending on the downside for quite a while now, right? It's been creating continuous lower low, lower high, right? This time, before it ended on Friday, it kind of created a lower low. Now, if you are creating a lower low, structure-wise, what do we expect? A lower high being created, right? Somewhat coming up on the upside like this, and perhaps, continuing on the downside. Now, there are two sides to it. It could either create a lower high and then perhaps try to create a lower low, or perhaps even create an equal low, right? An equal low, and then perhaps totally change totally change direction. But since we are coming closer to the psychological level, which is 1.300, then I would perhaps be patient a little bit to see GBP USD kind of hit this zone, right? If it doesn't, then I might as well be looking for perhaps some support level he had already established here. But if there's no support level, I'm going to likely be a little bit patient, wait for it to hit this 1.300, which is a perfect psychological level, and then use that as a means of reversal, which is a strong support level, push up a little bit, perhaps come down again, and then expect a change in the direction. In the meantime, we're not going to try and be too forward with ourselves. Let's take it one point at a time and then see if we're going to have a formation like this. If we hit this level, it will only be good for us to look for a buy position, perhaps catching a retracement in the move until the market condition totally changes, for us to see if in there we're going to have a change in trend or not. So yeah, keep your eyes on a move like this for GBP USD. Let's see what is happening with GBP JPY also as well. Now, you might as well realize that if you've been trading the pound pairs for a while now, correlation is something that's totally lost with the pounds. We don't really have like all the deep correlation that we used to have in the market these days, right? Where you're going to see GBP/USD dropping concurrently, you're going to see GJ also dropping concurrently, GCAD dropping and stuff like that. Why? Because the pound has no major macroeconomic that is driving that currency pair. It is literally being fed off from the other event that is happening globally, like the Russia, like Ukraine, like blah blah blah. So when we had a UK economy trying to leave the EU, then the whole world was centered on the pounds, so they were highly correlated. These days, those things have been solved, so there's not much of enthusiasm correlation going on within this currency pair, so they are treated totally different. So you don't want to really think about correlation these days when it comes to the pound pairs. You want to treat each one of them totally different. Technically, fundamentally. So yeah, this is what I kind of see with GJ as well. So you realize that what GU was literally dropping, and then GJ kind of reversed on the upside. It has also been creating this lower high, lower low structure, right? But one way or the other, if we still remember our lessons from market structure, then for us to be convinced that this lower low, lower high structure is being changed, or we are reversing onto the upside, we should make an effort to come and create that lower lower low, and then not make any effort to break that last lower low, and then perhaps that would be the reason for us to see maybe a potential change in direction, and then look at a potential trade as well. So keep your minds and then your eyes very close on GJ. Perhaps we could have like that drop. Now if you look at this closely too, we can see that what we can also use in Confluence the Fibonacci to kind of see that we are likely to come into the 51.8 or 78.6 retracement regions, and that could be like a good reason to see perhaps a rejection in this area and then a drop in price. So if you really want to look through all the currency pair one by one, this video might as well take the whole 1 hour 2 hour, which is not what I intend to do. So I'm now going to be skipping and quickly looking at the one that have viable trade setups, and then we can talk about them briefly as well. Now with GCAD, it kind of looks similar to what I'm looking at GU, right? Already hitting that psychological level. So one way or the other, if we're still making that lower high, lower low structure, then it is only enough to tell that we could potentially also make a lower high. So what this is basically telling you is that for most of the pound pairs, I'm looking for a buy potential trade, and then for gold as well, I'm looking for a buy potential trade as well. Don't forget that, right? Let's look at oil. Now with oil, nobody could have told exactly where it was going to stop, but if you kind of look into the weeklies, then you can realize that what we had some previous weekly highs which oil literally smashed through, right? So upon smashing through that, you as a trader may not necessarily be able to tell the next potential stop of it, because if you look at this on a weekly time frame, the next high was like, let's see how many pips from the last high literally created, about 180 pips. So one way or the other, I kind of relaxed and was waiting that one way or the other we would find oil kind of trading into this range for me to have a speculative reason to see that it's going to drop, which is what technical analysis is about, using historical price movement to anticipate or trade future price movement. So as far as I do not have any solid reason to tell me that oil is going to drop from 129, there was nothing I could potentially do, right? So in the meantime, when you look back at this, then you can tell that what there is also exactly nothing that we can anticipate using historical price movement or fundamental wise to tell that oil is going to do this or oil is going to do that. But if you really want to follow just market structure of creating high low formation, which is indeed the representation of an uptrend, then with this little blip of a drop here, one way or the other, we can expect oil to also make a move on the upside, perhaps trying to even create more higher highs to approach the all-time high of $147 per barrel, right? And then before making a move, or perhaps reaching this high which it has created in the past, let's say how many years now, whether 18 or perhaps even approaching 20 years now, and then we have another drop, right? So yeah, that would be like my simple perspective for oil as well. Let's look at Bitcoin. I've kind of had interesting trades on Bitcoin over the past weeks. One that I caught while I was in Dubai, and one that I totally missed. But Bitcoin has been making some pretty decent moves that I feel like as a trader, if you really give all your focus and attention to it, right, you could catch some very decent move that is going to make you insane money. Now, the move that I caught with Bitcoin was a move that I caught around this area. It was a pretty simple move, right? Remember that I tell you that applying all the concept that you've learned is what is going to lead you ahead of the curve in this market. So looking at this, we can clearly see that what we kind of have this lower high, lower low structure being created. With a simple application of Fibonacci, then you can clearly see that what we had the market literally trading in between that 7861.8 retracement region, being patient, watching candlestick reversal patterns. Then this could have been a very simple trade. My initial anticipation was that BTC could just come back to these lows, which is like the part of least resistance, or perhaps reaching my second take profit of 4,000, right? 40,000, which is like also a very nice, decent psychological level. But we kind of had it trading all the way down to 34,500, which was very decent for swing trading, and then holding this trade would make you insane profit, which a lot of people actually held and then made money from the community, right? This trade was dropped in the community and a VIP for people to make insane money. Then subsequently we had BTC visiting the same region again, right? And then, as history may have it, literally repeating the same thing, which is what makes trading as easy as ABC that most people don't get, right? And then I kind of keep emphasizing that the whole perspective of trading is using historical price movement to anticipate future price movement, which is okay, it has done this before, it is likely to do this before. It is your responsibility as a trader to use proper risk management within reasonable means and then anticipate on what you're expecting the market to do. And then once it does that, you totally profit from it. So looking at Bitcoin now, we're kind of trading along the third touch of the trend line with a very zigzaggy way. But if you kind of look closely too, you can kind of see some chart pattern, more like a triangular pattern here, which is more representing of a continuous pattern, which could lead Bitcoin to drop. So in my perspective of Bitcoin, we could have a break of the trend line, but who knows? We got to be patient and anticipate what could potentially happen. But technical wise, looking at the whole pattern and formation, I kind of expect, a little bit of drop here. And then when we come to the indexes, which is the Nasdaq, US 30, they've been all over the place, just zigzagging, choppy. So totally, I've not had any potential trade on it, but I have like my support zones marked out here. Once we come into those zones, I may potentially speculate on these markets and perhaps find a decent trade on the upside, which is for Nasdaq, in the same way for US 30 as well, right? I'm going to really be wrapping up here for my perspective. Subsequently, within the week, I'm going to shoot other videos to also share with you my perspective on the other currency pairs. Maybe you have a favorite currency pair that I've not touched on. Don't be too sad about that, right? Within the week, Monday, Tuesday, I'm back. I'm fully back. I'm going to shoot a lot of videos and then touch on the ones that I've not touched, so that we don't have this video being extremely long. And then yeah, expect that as a promise. I'm going to definitely do that for you guys, and I hope you guys really enjoyed this video and then learned a lot from it. If you didn't really understand everything that I'm saying, then perhaps you have to replay this video again and then patiently watch it, and I'm sure that it's going to really make a lot more sense to you when you play it for the first, second or third time, and then you can learn in fact a lot from it, because I've shared insane things here that I promise you're not going to get anywhere on YouTube or any course that you may have watched. I hope you guys really enjoyed this, and then yeah, I'm definitely going to see you guys in the next one. Make sure to click in the link in the description to join the Telegram community, and then follow me on all social media at KOJOFOREX, and don't forget to subscribe to this channel. We're currently hitting almost 60k, and then this year's goal is to hit 100k, which we know we're going to hit it with the help of you guys, right? I appreciate you all for sharing this. Yeah, without wasting my time, I'll see you guys in the next video. Peace.